Okay, hello guys. What's up? What's good? Good evening, good afternoon, good night, wherever you're watching from. You're welcome. I just want to do a quick video on this particular trading scenario I'm working on. Okay. Before you can be able to understand what is happening here, you need to understand types of market structure and what we look at for in structure. So structure, we have to start from structure. So I'm going to go straight to the point how I'm looking at this whole concept. You have to start from the daily time frame. On the daily time frame, you're looking for this kind of structure: A, B, C, and D. Or that's in a bullish environment, or in a bearish environment, you're looking for A, B, C, and D. So this is what you're looking for in a bullish environment or in a bearish environment on the daily time frame. Now, once you get this type of structure, it's obvious that this is actually what? A breakout structure. Now we have a breakout structure in a bullish environment, bearish environment, we have what? A breakout structure here. Now let's discuss this one. Now there are two types of structure. We have a range structure. We have a range structure, and then we have a range structure, and then we have, there are two types of pullback. Sorry, there are two types of pullback. We have a shallow pullback and a deep pullback and a complex pullback, but we're going to focus only on shallow pullback and deep pullback. So we're going to focus only on shallow pullback for this strategy, shallow pullback. And deep pullback. Now, for shallow pullback in a bullish environment, we have a pullback where price breaks structure, and then there still exists unmitigated area below it. By unmitigated area, I mean we have other blocks and imbalance field below it that's yet to be mitigated, and price break structure. In this kind of scenario, in this kind of instance, we have what we call a shallow pullback. Now, you do not have any business selling. Now, a shallow pullback creates what we call a range structure. It does not create a major structure, rather it creates a range structure, because whatever price is doing here, since we are here to mitigate all mitigated area below it, we are still on a range structure. So you should be looking for a buy. And then for the buy, that doesn't mean that you're supposed to buy here. You buy at the discounted price level. You're not concerned with sell. You're not taking this sell. Rather, you're taking this this buy. You buy at the discounted level until price takes out this low. Then we should start looking for a sell. If price takes out, come back and mitigate all this imbalance failure, and then break structure above, from this point, we should be looking for a buy. From here, we should be looking for a sell. From here, we should be looking for a buy. From here, we'll break structure now. We now have what we call a major structure break. So this is what we call a deep pullback, because price pulls back mitigating all the unmitigated area below it, we now have what we call a complete pullback or a deep pullback, which leads us to a major structure break. While this one is a shallow pullback, which creates a range structure break. So shallow pullback creates a range structure break. Sorry, let me clean this because I'll be fast. I only have 30 minutes for this video recording before it goes off. Trying to delete all of this. Delete all of this. Delete all of this. Yeah. So shallow pullback creates a range structure, while deep pullback creates what? A major what? Structure. That's all you need to understand from this. So we're going to go straight to the chart so I can show you guys what I mean by that. Now this one creates what we call range structure break. So let's go to the chart so I can show you guys what I mean. So for this ABC pattern, you have to use, we'll have the ABCD pattern on the TradingView platform. You can use this ABCD pattern to spot all of this on the chart. So once you come to the daily time frame, you don't have business with whatever is happening. You just open the chart, you can zoom in to look at for this pattern. We need to see the ABCD pattern every year. You can see clearly before this one, we have another ABCD pattern, like I showed you, ABCD pattern. So we have ABCD pattern here. Let's mark it out. A, okay. We have A, B, C, D. Now, we have a breakout structure here. Okay. We have a breakout structure here. And breakout structure, of course, we all know that breakout structure has to be a candle close above it. So if the first candle wick it is a trap, it's a liquidity trap, you have to wait for the candle to close above it for us to have a complete break of what? Structure. So in this regard, we'll have a complete break of structure. And then after the break of structure, what did price do? We are expecting what? A pullback. Like I say, we have two types of pullback. We'll have a shallow pullback or a deep what? Pullback. Now, as price is pulling back after this break of structure, as price is pulling back, you now ask yourself, do we have, I think the color of this is too shouty. Let me make it black so you can be able to see what we are doing here. Sorry, trying to make this guy. Do we have an unmitigated area below it? Of course, the answer is what? Yes, we have an unmitigated area below it. So we have this other block here on the daily time frame with this fair value gap. So we're going to mark everything out. Okay. Then we also have, after this breakout structure, we also have this, this is a valid order block. Okay. So we wait for price reaction on these levels. So we now have a breakout structure, and then what the price do? Price came here, gave us a small time frame, little time frame buy, and then we'll have what? A break. And then, oh, I forgot. This is also low, high. This is also what? A valid what? Order block. So after you get your ABCD pattern on the daily time frame, that's a breakout structure. And then the next is to mark out all mitigated area below that breakout structure or above that breakout structure for a bearish or scenario. So you mark them out, and then you wait for price to come to react from them. Then you go to a lower time frame, say 2-hour time frame, to wait for what? 2-hour internal structure shift for you to either buy or sell. For instance, when price came to this place, when price came to this daily POI, what did we get? We are looking for what? An internal structure shift on the 2-hour time frame. So we'll have first touch, we'll have what? Price was pulling as after the first touch, we now have this. Price takes this guy out. What do we have below it? We don't have anything. Everything here has mitigated. Remember that this is an internal candle. It did not take out anything, so it's not valid. So this whole candle doesn't give us any entry. So there was no entry on this first move because everything here was mitigated. This is an order flow and it has been mitigated. So we don't have any entry here. And then what did price do? Price was pushing down, pushing down, pushing down. And then price weaks out this guy, weaken this guy out, there is no entry. It's just a liquidity trap to continue the sell because we're expecting what? A displacement. We are expecting a full candle close above this high. This is what we want. If we see this candle close above this high, this confirms that this price is going to respect this level of area of interest on the higher time frame, which is the daily. So we did not have this. This was a liquidity trap for us to continue going down. Of course, we are not looking for anything. Like I said, on the daily time frame, after price breaks structure, and then what we expect what a pullback. So you have to wait for the pullback to any of these levels. Of course, you should know that here becomes your what? Your lower. This is your lower. For this leg, this is your higher low. This is your higher low. And this is your higher high. You see, this is your higher high. Okay. And this is your what? This is your what? Your higher low. Okay. And then for here, we have not confirmed if this is going to be a what? A higher high until price change structure on the lower time frame. That's when we can confirm that this is actually a higher high. Of course, price did that because if you come to a 2-hour time frame, you can see that we had a 2-hour internal structure shift for us to confirm that this is now the new higher high for this particular trading range. Of course, you can see that this structure, we have the price takes out this low, then pushed up before coming down. So this was the confirmation after price takes out this last pullback of the 2-hour time frame, which you call inducement reading, or call it inducement. The first pullback that price takes out in this internal structure of the 2-hour time frame is called an inducement. So this is what confirms that this could be actually a new higher high that the daily time frame is actually doing what? Creating. Now, from here, we now have areas of interest where we have actually mapped out from our chart. Of course, it's not every area of interest we should be taking our trade from. There are areas of interest that we should be focusing on. Now, when you know that this is actually, we have areas of liquidity trap which you are not supposed to be taking trade on. For instance, when you have this kind of ABCD pattern, you have to pull out of Fibonacci from this place, not from here. This is the origin. The origin is here. Now to this place. Provided that price is yet, when price breaks structure, it is yet to mitigate all this area here. So this is just a range structure. We are looking for what? A deep pullback to create a major structure break, because of course these are what we call this external liquidity, and these are major liquidity zone. So this is not yet a major liquidity zone, it's a minor structure, and then we still have an unmitigated area here. So this is actually a liquidity trap. So if you are trying to buy from here, price will most likely take you out. Even though you have a POI around this place, it's still a liquidity trap because price is here to take out all this liquidity below it.